Will Toronto home prices rise when interest rates come down in 2014? The recovery will begin when consumers have confidence that the home they buy today will not be worth less tomorrow, according to Phil Soper, CEO at Royal LePage. In this video, we'll be taking a close look at the rapid changing Toronto real estate market and the effects lower mortgage rates may have. My name is John Carr, and I work with my partner, Rosalin Smith-Carr. If you're actively looking to buy your dream home and you want to connect with a pro, click on the link below the video and book a call at a time that works for you. After several months of slow activity, Canada's housing market rebound appears imminent and may even begin the long-awaited interest rate cuts. According to the latest Royal LePage house price survey, the cumulative price of a home in Canada rose 4.3% year over year to $789,000 in the last quarter of 2023. However, it dipped 1.7% from the third quarter as high borrowing costs continued to weigh on market activity. Broken out by housing type, the national median price of a detached home increased 4.4% annually to $816,000 in the first quarter of 2023, while the median price of a condo jumped 4% to $583,000. On a quarterly basis, though, the median prices dropped 2.1%, while prices have far surpassed the pre-pandemic levels. The latest national aggregate is 18.7% above the last quarter in 2020, and the levels are 22% above the quarter levels in 2019. They are yet to fully recover from the recent correction, remaining 7.9% below the peak reached in the first quarter of 2022. Phil Soper, President and CEO of Royal LePage, expects the housing market to rebound in the first quarter of 2024 before any interest rates come from the Bank of Canada. The suggestion that the housing will rebound only when the Bank of Canada lowers rates misses the mark, he says. After several months of slow activity, Canada's housing market rebound appears imminent and may even precede long-awaited interest rate cuts. That experts see the tipping point occurring in the first quarter before the highly anticipated easing of the Bank of Canada key lending rate. Once the bank does cut rates, Toronto's prevailing shortage of supply will put upward pressure on prices. Sideline home buyers are expected to race back to the market in droves. Even a 25 basis point could spur a flurry of activity similar to the traditional spring rush seen in 2023, said Karen Yalewski, Chief Operating Officer at Royal LePage Real Estate. As such, the brokerage expects the combined national home prices to see modest quarterly gains throughout the first half of 2024. This may be followed by more considerable increases in the latter half once rate cuts begin. All told, the national aggregate home prices forecast to rise 5.5% annually in the last quarter of 2024. While the increase is in line with Royal LePage's previous prediction, the quarter dip in the last quarter of 2023 means that the real estate company has made a small revision to the price down to $830,000 from $840,000. We believe that we're now at the bottom of pricing, and that if you were to buy today, you're not going to see a dramatic decrease in value. In fact, it's likely the opposite. When interest rates do come down, it's very likely that you'll start to see prices climbing, according to Yalewski. This past spring, rates didn't even come down to spur more activity and higher prices. All they had to do was stop rising. When interest rates do decrease, it could be a little bit more dramatic. When people want to buy homes and there's not enough supply, that is what will drive prices up. Thank you very much for watching. If you see something you like, we'd appreciate a like.